Oh, this is Tom Cloud doing a special report for SRS Rocco. So much going on in my world, 46 years in this business of gold and silver and precious metals, and the peripheral problems and things are just hard to believe I'd ever see anything like we're seeing in the world today. Just think we have a president, we've had 2 quarters of economic contraction, 1.6% in the second quarter and 1.4% in the third quarter, but because it turned up the last week of the quarter, he doesn't want to call it a recession. We're in a recession. We're in 2 quarters of contraction of the economy, and it's going to get worse. So we look at this, and what is the report so far this year? The Dow's down 21%, NASDAQ down 35%, S&P 25%, gold's down 8%, and it's the best investment out there. Silver down 17%, and palladium 11%. So everything is down, and we acknowledge that. But you look and see what's going to happen is going to drive it, and certainly the interest rates is the first topic we're going to touch on, because we see the Bloomberg Total Index Bond Fund, it's down over 20%, and the Fed's got to make a decision whether or not they're going to have another rate hike in November of anywhere from 1/4 to 3/4 of 1%, better known as 75 basis points. If they do that, in my opinion, it's going to put this economy in a tailspin, because you can't have rates going up like that. Look at the real estate market. Real estate mortgage rates were 3.75 for 30-year fixed rate a few months ago. Now they're nearly 7. Interest rates have nearly doubled, and we've seen a contraction in real estate all over the country. The pandemic prices have now been wiped out by the interest rates going up and killing the real estate market. And that will continue. So we look at it now and see inflation. If you don't raise the rates, the inflation is going to get worse. Inflation just came out at 8.4 for an annual rate of inflation, which we're near double digits. And just one sidebar, they're getting ready to have to update Social Security to people my age and older. They got to give us a big boost, because it's the worst inflation in decades. So what happens when they do that, it cuts down the solvency of the Social Security pool. I've seen figures where if we're going to get an uptick of 7-8% on your Social Security check, it could cut 10 years off the life of Social Security payments. This is what we're dealing with. Everything is going the wrong way. And we're watching the interest rates, we've watched them like a hawk. But the other thing we got to watch like a hawk, beside the inflation rate, is the U.S. dollar. The U.S. dollar since March has gone up 15%, and gold is up everywhere in the world except the U.S., because we have the strong currency, when usually we're the ones that doesn't have the strong currency. So now we're sitting there watching. If you're in England or you're in any of these countries where Japan, where the dollar is going down for them, or their currency is going down, dollar's going up, so they're sitting there making great buy. They're up 13% if you bought gold in sterling pound. So we've got to realize this is going to turn, and when it turns, it's going to get ugly, and you're not going to be able to find gold or silver. We already are behind in deliveries right now, and we haven't seen anything because the panic hasn't started, but it will start soon. I made a comment on some other interviews I did, and some of you have seen it, because I've had SRS listeners send me emails directly, ask me questions, and that is diversified confidence. Right now, you have got to look at what you're doing and put your assets in diversified confidence. Don't put it somewhere. If you think the stock market's going to continue down, which I do, how about people like Ray Dalio? He runs Bridge, the biggest fund in the world, Bridgewater. And then you've got Minion over, and he's at one of the big Guggenheim firms. They're all saying a minimum of 10% drop from here, pushing the Dow below 25,000, and some are saying it's going to go down 20% more. But as you look at it, do you have confidence to leave money in the stock market? I don't. I mean, I can't just sit and lose 10 or 15% when every major money manager is getting out, and yet yours is probably telling you to stay in. So don't go into things you don't have confidence in. I have big confidence that gold is going back to where it was over 2000 back in March. Just think if it goes from 1660, where it is today, to 2000, you're going to make 20-some% if it just goes back to where it was in March. I don't think goes through going up by any imagination. In fact, I expect much bigger prices, 2,400, 2,700 next year. That's what I expect right now based on what I know. So look at it and use diversified confidence. Put your money in things that you feel will go up, and take your money out of things you feel will go down, and you'll be much, much better off, in my opinion. So I want to flip my page here. Last week, House Representative Mooney from West Virginia introduced a bill in Congress to go back to a gold standard. Now, we know it's not going to happen, but if the Republicans do get control of the House in 3 weeks, we could see some interesting debate and some compromise on this, because we haven't had an audit of our 813 tons of gold that we have in Fort Knox since Dwight D. Eisenhower in the 1950s. So some people think we don't have it, others think we do. I don't have any inside information to tell you either way. But I can tell you the dollar has lost 97% since the Federal Reserve came into being in 1913, and 30% of its value since 2000. So this is just going to keep going on. We're in a cycle now where the dollar's up because it's a safe place among the countries out there. So people put it in the U.S. Treasuries, getting very little interest rate, but they feel because the U.S. has a full faith behind it that it's safe. As a paper investment, it probably is the safest. But once it collapses, look at this going on right now with Credit Suisse, $1 trillion plus loss. You know, major banks can't do that. You're going to have them going, and places like the FDIC have no assets to cover those kind of losses. So then you're at the mercy of bail-ins. Remember, G7 says they will never bail out banking system again. So now when your money's in the bank, you're a creditor. They own your money. That's the way it is right now. That's the law. If you think I'm crazy, look it up. Every penny you have is not yours. You've got it because they allow you to have it. So just be careful that you know everything going on. We're having a declining silver production, which Steve and I have talked about in detail. We look for a big year in production this year, and it's been just the opposite. And all I can tell you is it's going to continue to shrink as not just the industrial demand for, solar panels, electric cars, other fundamental uses. We're talking about silver going down, but investors coming in. We've already been to $50 twice, first in 1980 and then again in 2011. And we think this next time when it goes through that number of $50 per ounce, it's not going to stop. It's going on to 100 and more than that, in my opinion. So you look at it and you got to follow what the Fed's doing. We've talked about watch the dollar. Premiums are way up. Steve and I had a long conversation. Why would a refinery, knowing what they know, how hard it is to get silver in particular, they're going to put a higher premium, but you're still buying it cheap because what happens, you'd rather be 3 or 4 months early than a day late. Two things happen. All these move into the futures market, causing shortages in the ETF markets, and everything goes crazy. And you see silver go from 19, where it is today, to 22, 23, 24, just like a snap of your finger. That is going to happen, in my opinion. So the longer you wait to get in, trying to see if it's going to go down 50 cents or even 4 or 5% doesn't bother me, because the product I introduced to Steve, as we were talking last week, about a new product we're real excited about, is Germania. We're going to be hooked in with the major distributor of this product in the U.S. So if you go to the internet and look at Germania, these are made overseas. They're the hot new silver bars, and we got kilo silver bars for the first time in quite a while. And these they're beautiful. They have serial numbers, and we'll be doing a lot of these Germania. They also come in 10-ounce bars, but what I like, because it's LBMA, are the kilo 32.15-ounce silver bars. Another thing Steve brought to your attention is at Cloud Resources Group, what we're doing for people. I mean, we know what to do when you're buying barter material with silver, 1-ounce coins, but what you don't with gold, you want to go down to 10th-ounce products. And while the premium is very, very high, in my view, we're the lowest by over 30% premium of the big people out there. Steve did the research. You've seen it on this website. And we're 27% over on 1/10 ounce gold eagles. Three of the biggest and most reputable are 55 to 70% on that same product. So if you call Dan in our office at 800-247-2812, he can help you with that. The last thing I want to mention is, it sounds simple, but right now, gold you can buy and silver you can buy, and you can also sell it instant, liquid, very quickly. But I believe coming soon there'll be a time you can't buy either one, gold or silver, because of the shortages or intervention in the markets. So you've got to get your plan and get the gold and silver while you can, because it is getting harder and delivery times are getting longer. And it's not going to get better, because we're going to get into what you're going to hear now are unfunded liabilities. We have our hurricane. These people need help. The government should give them help, I think they should. But what happens is we now have another $1 trillion of unfunded liabilities. The money just shows up. Who gets it? The wealthy. It's not under anything. And then you see all these unfunded liabilities, that student loans, all this money is being created and just put in the money supply, which is going to kill the dollar. It's going to kill it. The dollar may not even be standing in 2 or 3 years. Who knows? So we've just got to be careful. But here's the last one. I had some clients fly in to come visit with me in a private plane, and we talked for about 2.5, 3 hours, 3 guys. And they came up, and finally the guy says, I've talked to you for 2 hours, and I figured it out. All I want to do is buy insurance. I've got insurance for my boats. I've got insurance for my car, my home, second home. I've got insurance on all that, and I hope it doesn't get used, but I'm paying premiums I'll never see again. Look at precious metals as insurance, and you may make a profit on the premiums. Look at buying gold and silver right now as an insurance policy against all the chaos and all the problems we talked about today. So buy your insurance, buy your gold, buy your silver. 3 years from now, 5 years from now, maybe we have a different administration and it's time to put your money back into equities. So you liquidate your gold and silver. I can't guarantee you, but I'll tell you, I think you'll be way ahead. You'll make money with your premiums and get them back, and we'll have that insurance against all these catastrophes that can and will happen with economics the way they are. So hopefully you'll look at that and think about it like they did and come up with the same thing, that you want to insure what you've worked hard. So once again, you're moving money out of equities and bonds that are hurt as interest rates go up, and move it into gold and silver and thing. And then lastly is the diamonds that we are really, really, really feel you need to look at as a small percentage of your asset and diversified confidence. Go to icecap.diamonds, ICECAP.diamonds, and look at it, and then call the office and set an appointment to talk to me, because diamonds are confidential, they're portable, they have very favorable tax situations, and they are going to be the next booming product in the hard assets, because diamonds are now liquid. If you haven't seen the video I did, call 800-247-2812. Tell Dan or Catherine that you would like a copy sent to you of the video that Jacques Verhey, the founder of IceCap.diamonds, did. And we'll look, but you'll need to talk to me about it. I'm excited about it. But do a little homework. Go to IceCap.diamonds, look at it, and call the office 800-247-2812 and set an appointment to talk to me about this. I'm very excited and think it's going to be one of the better investments you can make for the next several years and still have the confidentiality and the portability. Hopefully I've covered all these subjects in this special report that Steve and I talked about bringing to you, as we talked about last week, as we do quite frequently, what's going on in his world, what's going on in my world. With this special market update for SRS Rocco, this is Tom Cloud signing out.